Okay, so the AI gold rush is officially here, right? Everyone's talking about it. But with billions, literally billions being thrown around, how do you, as an investor, figure out what's real and what's just hype? Well, that's what we're going to do today. We're going to follow the breadcrumbs left by Wall Street's top analysts to find some really interesting paths to long-term growth.
And that really is the million-dollar question, isn't it? I mean, you look at the latest tech earnings and they're all over the place. It's left a ton of people scratching their heads, asking, is all this crazy spending on AI actually, making anyone any money? It's a huge challenge to separate the noise from the real high-growth opportunities. So here's our game plan. First, we'll dig into this investor's dilemma. Then we'll look at 3 fascinating picks from some top-tier analysts: Apple, MongoDB, and Western Digital. We'll compare their different approaches and then, of course, wrap it all up with the big takeaway for your own strategy. It really feels like a tale of two AIs at the moment. You've got some companies just absolutely crushing it, riding this wave to massive profits. And then you have others, well, they're just kind of lost in the shuffle. So the real trick is figuring out who's who, and that's exactly what we're going to get into. So when things get this confusing, what do? Well, a pretty smart move is to see what the pros are doing. We're talking about analysts who live and breathe this stuff day in and day out. Their research can be like a roadmap when everything else feels uncertain. And listen, we're not talking about just any analysts here. These guys are the real deal. Seriously, look at their rankings from TipRanks. Amit Daryanani, Wamsi Mohan, and Koji Ikeda. These are folks ranked way up in the top percentile out of thousands of analysts. They've got a history of making great calls, so yeah, when they have something to say, it's probably a good idea to pay attention. All right, first up, let's get into it. Our first pick comes from analyst Amit Daryanani, and his choice is Apple. Now, you might be thinking, Apple? Aren't they an iPhone company? And yeah, you're not wrong, but that's not where he's looking. His entire focus is on what he sees as Apple's secret weapon, its services division. So here's Daryanani's big idea, and it's actually pretty brilliant. He's saying, hey, everyone gets obsessed with the App Store numbers, but that's a distraction. He thinks the real long-term growth, the stuff that's going to last, is coming from things like Apple Pay, iCloud, and all those other services that are just humming along in the background, making a ton of money for Apple. And check this out, because this is where the detective work comes in. You see that 7% total growth for the App Store, and you might think, okay, that's pretty decent. But what's really happening is that huge growth in stuff like music, we're talking 21%, is actually hiding the fact that gaming revenue declined. See? This is the kind of insight you get when you look beneath the surface. And this right here, this is the knockout punch for his argument. 14%. That's the growth for the entire services division. So that proves his point, right? The whole ecosystem is so strong that even if one piece, like gaming, has a rough patch, the overall machine just keeps on growing. It's incredibly powerful. Okay, let's switch gears from consumer hardware to pure software. Our next analyst, Koji Ikeda, is making a big bet on a company called MongoDB. And his thesis is simple. He believes they're building the fundamental database engine that's going to power this whole AI revolution. So what's the big deal with MongoDB? Why is it supposedly so perfect for AI? Well, think about it like this. Traditional databases, like the ones from Oracle, are like a super organized old-fashioned library. Everything's in its place, filed perfectly. MongoDB, it's more like a human brain. It's built to handle all sorts of unstructured, messy data. The kind of data AI loves, and make sense of it fast. It's just built for the modern world. And if you want proof, just look at the numbers. Their cloud platform, which is called Atlas, is growing at a staggering 30%. I mean, that is almost 3 times faster than its rivals. So when you see the stock has a high price, this is why. Ikeda's point is that they're just dominating a market that's becoming more and more important every day. All right, for our third and final pick, we're going from software all the way down to the bedrock, the hardware. Analyst Wamsi Mohan is looking at Western Digital, and this is what you'd call a picks and shovels play on AI. He's betting on the thing that all this data has to physically live on, storage. Think about it. Every single AI model, every query, every piece of content, it's all just data, and that data has to be stored somewhere on a physical device. That's what Western Digital does. They're essentially the landlords of the digital world, building the warehouses where all this information is kept. Mohan's argument is really straightforward and hard to argue with. He's basically saying, look, we're creating an insane amount of data, and that's not stopping anytime soon. As long as that's true, the world is going to need more and more storage. It's a bet on a long-term secular trend, basically a bet on the growth of information itself. And just how big is this wave we're talking about? The market for AI and cloud storage is projected to grow by more than 25% every single year until 2030. That is just a massive, massive tailwind. And Western Digital is sitting right in the middle of it, ready to catch that ride.
So what does that market growth mean for the company's financials? Well, their targets are pretty ambitious. We're talking revenue growth over 20%, gross margins hitting 50%, and an earnings per share goal of over $20. Now, look, if they can even get close to hitting those targets, wow, that could be a huge win for investors. Okay, let's pause for a second and take a breath. We've just looked at three really different companies, right? We've got a consumer tech giant, a specialized software company, and a fundamental hardware maker. So now let's zoom out and connect the dots. What's the big picture here? What's so cool about this is that it gives us three totally different ways to think about investing in AI. With Apple, you're betting on the consumer ecosystem and its high-margin services. With MongoDB, you're betting on the specialized software that developers need to build AI apps. And with Western Digital, you're betting on the fundamental infrastructure, the actual storage. So you have services, software, and storage. Three completely different angles on this same trend.
So, what does this all mean for you? What's the big lesson we can take away from all the hard work these top analysts have put in? How should this shape your thinking about finding long-term growth in AI?
I think the main takeaway is this. The AI boom isn't just about one thing. It's not just about chatbots or image generators. It's a huge, complex ecosystem. And there are opportunities to be found at every single layer, from the services you use on your phone, to the software that powers businesses, all the way down to the physical hardware that makes it all possible. There are just so many ways to play it.
So these pro analysts are placing their bets on services, software, and storage. It gives us a really useful way to look at the market, doesn't it? It shows there's not just one right answer. So the question to leave you with is, now that you've seen these three paths, where do you think the most compelling long-term growth is hiding?